Is building wealth and taking control of your financial future something that excites you? Imagine having a powerful investment platform at your fingertips, one that blends automated investing with the flexibility to customize your portfolio. That's the promise of M1 Finance. But before you get too excited, a crucial question arises: where exactly can you access this powerful tool? That's precisely what we're diving into today. We're not going to start with a dry, standard introduction. Instead, let's paint a picture. You're sitting at your computer, ready to take the leap into investing. You've heard about M1 Finance and its innovative pies, a visual and intuitive way to build and manage your investments. You're eager to get started, but then the thought hits you: can I even use this in my country? This is a question that many aspiring investors outside the United States find themselves asking. The world of fintech and online brokerage platforms is rapidly expanding, but access isn't always universal. Regulatory hurdles, licensing requirements, and strategic business decisions often dictate where these platforms can operate. So, let's cut to the chase. As of my last update in late 2023 and based on publicly available information, M1 Finance is primarily available to residents of the United States. Now, I know that might be disappointing for those of you watching from outside the US. But don't click away just yet. We're going to delve deeper into why this is the case, explore the implications, and discuss potential alternatives you might consider in your own country. Understanding the landscape of international investment platforms is crucial in your wealth-building journey. Let's break down some of the key reasons why M1 Finance's availability is currently limited to the United States. 1. Regulatory compliance. Financial services are heavily regulated industries, and these regulations vary significantly from country to country. For M1 Finance to operate legally in a specific nation, it needs to comply with the local financial laws, obtain the necessary licenses, and adhere to reporting requirements. This can be a complex and time-consuming process. Each country has its own set of rules regarding investor protection, anti-money laundering, AML, protocols, and Know Your Customer, KYC, procedures. M1 Finance, being a US-based company, has initially focused on navigating the regulatory landscape within its home market. Expanding internationally requires a deep understanding of each new jurisdiction's legal framework and the resources to ensure ongoing compliance. 2. Licensing and authorizations. Operating as a brokerage firm or investment advisor typically requires specific licenses and authorizations from the relevant financial authorities in each country. The criteria for obtaining these licenses can differ substantially, involving capital requirements, operational standards, and the qualifications of key personnel. M1 Finance would need to go through the application process in each country it intends to serve, demonstrating its ability to meet the local regulatory standards. This process can be lengthy and involve significant legal and administrative costs. 3. Market prioritization and business strategy. Companies like M1 Finance often make strategic decisions about which markets to enter based on factors such as market size, growth potential, competition, and the alignment of the local financial culture with their service offerings. The U.S. market is one of the largest and most developed financial markets globally, making it a natural initial focus for many fintech companies. International expansion requires significant investment in infrastructure, customer support in different languages, and adapting the platform to local market nuances. M1 Finance may be strategically prioritizing its resources on solidifying its position in the U.S. market before embarking on international expansion. 4. Technological and infrastructure considerations. While M1 Finance is a technology-driven platform, expanding its services to other countries involves more than just translating the website. It requires ensuring the platform can handle different currencies, integrate with local banking systems, and comply with local data privacy regulations. This can involve significant technical development and infrastructure adjustments. For example, payment gateways and account funding methods vary across countries, and M1 Finance would need to integrate with these local systems to provide a seamless user experience. 5. Customer support and language barriers. Providing effective customer support in different languages and understanding the specific needs of investors in various countries is crucial for a successful international expansion. M1 Finance would need to invest in building multilingual support teams and potentially adapting its educational resources to cater to different cultural and linguistic contexts. This requires a significant commitment to customer service and localization. So, while the answer is currently that M1 Finance is primarily for U.S. residents, the financial technology landscape is constantly evolving. It's not impossible that M1 Finance or similar platforms could expand their reach in the future. Now, for those of you outside the U.S. who are feeling a bit disheartened, let's shift our focus to what you can do. The good news is that the rise of fintech has led to a proliferation of online brokerage platforms and investment apps available in various countries. While they may not have the exact same features as M1 Finance, many offer similar functionalities like automated investing, portfolio customization, and low-cost trading. Here are some general steps you can take to find suitable investment platforms in your country. 1. Research local regulations. Understand the financial regulations and the bodies that oversee investment activities in your country. This will help you identify platforms that are authorized and regulated, ensuring a greater level of investor protection. Look for platforms that are licensed by your local Securities Commission or financial regulatory authority. 2. Explore local fintech options. Many countries have their own thriving fintech ecosystems. Search online for investment apps and online brokers specifically available in your region. You might be surprised by the innovative solutions that are emerging in your local market. Use search terms like best investment apps, your country, online brokers, your country, or fintech platforms, your country. 3. Consider international brokers with local presence. Some large international brokerage firms have a presence in multiple countries, often through local subsidiaries or branches. These firms are typically well regulated and offer a wide range of investment products and services. Research if any of these international players operate in your country. 4. Evaluate features and fees. When comparing different platforms, pay close attention to the features they offer, such as automated investing, portfolio customization, the availability of different asset classes, stocks, ETFs, mutual funds, and the quality of their research and educational resources. Also, carefully review their fee structure, including trading commissions, account maintenance fees, and any other charges. With that said, thanks for watching, and until next time.